Welcome back, traders. Wall Street is opening a new trading week with alarm. A rally in oil prices fueled worries about stubborn inflationary pressure. Investors are stoking fears about imminent rate hikes amid growth in energy stocks. Other market-moving events today are the U.S. manufacturing PMI, a speech by Lisa Cook, and Tesla report. The U.S. stock market closed the turbulent week and the first quarter with decent results. On a Friday, the benchmark stock indexes rose by more than 1%, and the Nasdaq logged the strongest quarterly growth since June 2020. The Dow Jones grew by 415 points, or 1.26%. The Nasdaq added 208 points, or 1.74%. The S&P 500 climbed by 1.44% to close at 4,109 points. The major indexes traded mixed in the New York pre-market. The S&P 500 and the Nasdaq lost 0.15% and 0.75% respectively. The Dow Jones gained almost 0.3%, and the S&P 500 is likely to trade in the intraday corridor between 4,050 and 4,140 points. On a Friday, the index closed at the highest level since February 15 and extended growth for 2 quarters in a row. Its growth was propelled by high-tech stocks, which rallied by 21.5%. The Nasdaq jumped by 16.8% in the first quarter, the biggest quarterly growth since June 2020, and the Dow Jones closed the quarter with a modest 0.4% gain. The market managed to notch gains despite active sell-offs of bank stocks. The financial sector in the S&P 500 showed their worst quarterly performance, having fallen by 6.1%. Besides, the regional banking sub-index slumped by 18.6%. Stocks of chip manufacturers brought the largest profits to investors, and high-tech stocks were picked up steam while bank customers were withdrawing their deposits and yields of U.S. treasuries were going down. Yields of 2-year treasuries looked the sharpest monthly lows since 2008. Apple shares climbed by 1.6% on Friday, rising in parallel with the other top high-tech companies. Apple won its appeal against the decision by Britain's antitrust regulator to launch an investigation into its mobile browser and cloud game service. On a Friday, Fed President Susan Collins said that whenever the central bank makes a pause in rate hikes, it would be essential to put the funds rate on a hold for a while so that inflation is brought down to the target rate of 2%. The U.S. Commerce Department showed on Friday that consumer spending grew moderately in February, while inflation went down. The stock market cheered a decline in inflation. It proves that the Fed's monetary tightening is bearing fruit. The first week of April opened on a pessimistic note. Futures on the Nasdaq on the S&P fell on Monday as investors are trying to puzzle out whether unexpected oil output cuts by OPEC countries over the weekend and means an obstacle for disinflation or just mirror a decline in the global energy demand. The cartel of major oil exporters and its allies shocked oil markets on Sunday, announcing output cuts by 1.16 million barrels per day. Brent crude spiked by 6% in response. An oil rally pushed shares of energy companies such as ExxonMobil and Chevron Corporated 3% up in the pre-market. The OPEC decision could be a knee-jerk response to the signs of a waning global demand that was highlighted by gloomy manufacturing PMIs for much around the world. China's manufacturing sector, which accounts for a third of the second-largest global economy, lost momentum in March, and this raised the doubts about the green shoots of a recovery after COVID restrictions were lifted. Likewise, PMIs for the European Union and the UK also revealed a decline in production. The OPEC decision could increase global inflationary pressure and thus propelling the S&Ps worldwide. This indicates that the Fed's tightening will end up with the higher interest rates. The market foresees a 65% chance for a final rate hike next month. Yields over 2- and 10-year treasuries went up from Friday's lows. Rising treasury yields dragged down shares of high-tech stocks such as Apple, Amazon, Microsoft, and Alphabet by 0.6% and 0.9% in the pre-market. Tesla reported record-high quarterly car deliveries. Nevertheless, its shares fell by 3% because of modest sales in the first quarter despite lower price tags. McDonald's is closing its offices in the United States as it's going to inform corporate employees about its layoffs as a part of the broader company restructuring. As for the economic calendar, the market is anticipating the non-farm payrolls for March, which are due on Friday. Wall Street analysts foresee a slowdown in employment and wage growth, but the unemployment rate is expected to remain at 3.6%. The market response to the non-farm payrolls could be crucial for the US Fed's policy move, but markets will be short for Easter holiday. Other high-impact reports will be JOLTS job openings and the ADP employment report for the private sector in the United States. Investors are alert to the US PMIs released later today. Lisa Cook, a member of the Fed's Board of Governors, will also make her comments tonight. The US dollar index dipped by 0.1% against major currencies to trade at 102.40 at the opening bell. The intraday corridor for the index is seen between 102.10 and 102.90. OPEC's decision also influenced the currency market because higher oil prices will put pressure on a global inflation. The US dollar spiked following an unexpected decline in China's manufacturing sector. Later on, the greenback reversed downward and traded lower for most of the day because monetary policy became the focal point again. Eurostat reported that the Eurozone's consumer inflation remained at high levels in February, so the ECB has an argument for the further rate hikes. On the other hand, the US CPI slipped to 4.6% on year, a bit lower than expected. Investors predict that the ECB will raise interest rates by 60 basis points by the year end. Traders increased their bets to 61% on the Fed's rate hikes by 25 basis points in May, from 48% on Friday. The Canadian dollar benefited from the oil rally and asserted its strength. The USD CAD pays are now trading at 1.3470 and 0.3% lower. The instrument is expected to trade in the intraday corridor between 1.3410 and 1.3510. Brent crude futures have logged the sharpest intraday growth today over the last 12 months, and Brent contracts surged by 5.5% to trade at $84.33 a barrel in light of the OPEC oil production cuts. WTI futures appreciated by 5.22%. Goldman Sachs upgraded its forecast for Brent to $95 a barrel at the year and $200 for 2025. The cartel wants to make sure that oil market will avoid any glut in the second half of 2023 because oil exporters foresee economic weakness later this year. It indicates a slowdown in the global economic growth. It's not a bad scenario because such a slowdown is caused by the United States and the European Union in their struggle against soaring inflation. Anyway, the loonie welcomes the oil rally. As for the crypto market, popular assets failed to consolidate at highs and lost some of their gains. Bitcoin inched up by 0.3% intraday to trade at $28,150. Popular altcoins are trading mixed today, and the global crypto market revealed stunning results in recent weeks. Bitcoin is winning trust among investors. They treat their flagship crypto as an alternative safe haven asset. Nevertheless, the token seems to be losing momentum. The crypto market value shrank by $1.16 trillion. Hence, the market lost 2.30% in the last 24 hours. Bitcoin's rally is losing momentum because traders are cautious about large bets ahead of the crucial macroeconomic data, the US PMIs and the non-farm payrolls. Ethereum developers are anticipating an upgrade in Shanghai on April 12. It means that Ethereum is shifting to a new proof-of-stake mechanism aimed at enhancing safety, efficiency, and scalability. This upgrade is likely to set the stage for Ethereum's advance. Bitcoin is still trading in the range between 27,600 and 28,900. Investors are searching for strong fundamentals to exit the flat market. A breakout above 28,250 could push the token to the nearest resistance at $28,900. On the other hand, a breakout of the lower border could enable a further decline. And this was a look at the opening of the trading week in the US from the InstaForex analysts. Our team wishes you a successful trading week and a profitable one. Trade easy with the InstaForex and see you on the channel.